new week on Business Morning. Thank you for joining us and welcome to the program. I'm Chimeze Obi Iwago.
Thank you for joining us. I'm Ladi Williams. Good morning. We kick off from the global oil market as prices nudged up this morning, underpinned by strong demand during the summer driving season and a pause in talks to revive the Iran nuclear deal that could indicate a delay in resumption of supplies from the OPEC producer. Brent crude futures for August gained 30 cents to $73.81 a barrel, while U.S. West Texas Intermediate crude futures for July was at $71.96 a barrel, up 32 cents. Both benchmarks have gained more the past 4 weeks amid optimism over the pace of global vaccinations and a pickup in summer travel. The rebound has already pushed up spot premiums for crude in Asia and Europe to multi-month highs.
And back here last week, both the World Bank and the IMF made their views known about the state of Nigerian economy. In the words of the World Bank Country Director for Nigeria, Shobham Shodore, Nigeria faces interlinked challenges in relation to inflation, limited job opportunities, and insecurity. According to him, while the government has made efforts to reduce the effect of these by advancing long-delayed policy reforms, it is clear that these reforms will have to be sustained and defended and deepened for Nigeria to realize its development potential.
And in the bank's latest Nigeria development update titled Resilience Through Reforms, the bank notes that in 2020, the Nigerian economy experienced a shallower contraction of 1.8% and had been projected at the beginning of the pandemic at 3.2%. It says although the economy started to grow again, prices are increasing rapidly, severely impacting Nigerian households. Rising prices have pushed an estimated 7 million Nigerians below the poverty line in 2020 alone.
In the meantime, the International Monetary Fund, on its part, says Nigeria's economy is recovering gradually from the negative impact of COVID-19, but noted that both unemployment and inflation rates remain elevated. The IMF, in a statement at the end of its virtual meetings with the Nigerian authorities to discuss recent economic, financial developments and outlook, noted that the employment level continues to fall dramatically and, together with other socio-economic indicators, is far below pre-pandemic levels. Inflation slightly decelerated in May but remained elevated at 11.9%, owing to high food price inflation.
Anna, both institutions have made their recommendations for the way forward towards building a better and more resilient economy. And we'll look at that and some of the recommendations with Paul Alaje, the lead economist and partner at SPM Professionals. Next, this is Business Morning.
Mr. Paul Alaje, join us now on the program. Thank you very much for joining us, Mr. Alaje.
Great to have you.
It's great to have you
Thank you so much
in the studio, of course, today. Okay, so the IMF and the World Bank seem to be in tandem with their stance on the state of the economy. What do you make of those statements from those two bodies?
First of all, I would say that the two organizations seem to have studied Nigerian economy. And if you summarize what the two international organizations are saying is from joblessness and difficulty of finding opportunities in Nigeria. According to National Bureau of Statistics, unemployment is 33.3%. Youth unemployment, and I stress it because it's a huge concern, 54%. According to the National Bureau of Statistics, that is worrisome and disturbing. Now, inflation has started to ease out. We now have 17.9%, still very close to 18%, still according to National Bureau of Statistics. These are the figures these institutions are looking at. They commended government for response to COVID and also some of the policies that they've advised government to do. One of the policies remains allowing the prices, forces of demand and supply to advocate price for PMS in Nigeria. Now, government have started, and they are also worried, the two organizations again, that subsidy have resurfaced back into the system. And I know that it will be difficult for the Nigerian government to continue to promote subsidy because the foundation for subsidy removal has not been presented. And the truth is, if any government will remove subsidy, absolutely, including President Buhari will need to set up a committee to provide within 90 days what the soft landing if you like, what the cushion effect will be, not just for federal government, but at the local government where we have the poor people. Recall that IMF had said 42% of the Nigerian population are living below poverty line, and that's on one hand. UNDP in 2018 had said over 90 million Nigerians are living within multidimensional poverty. So if we remove subsidy, the guy that has 4 cars will be affected. But you see, the guy that cannot even afford a car will be affected more, because the price, disposable income, will emerge significantly, even though he earns the same thing. But what we spend on movement, which is energy to move from one point to another, will be drastically impacted. Should subsidy be removed? It should have been removed as at yesterday. But we still have some level of subsidy. But if you don't protect the larger proportion of people we have in our population, 42%, not for the rich, but for the poor, living below poverty line. You still have those that are poor, but they are not living below poverty line. So you see the number. So 42%, and those that are living, they are barely managing to survive. Exchange rate apparel market, like yesterday, if you look at Aboki FX, is around 500 naira. That means for you to live...
As last week, I mean, the exchange rate, the parallel market appreciated a little bit, but still within that 500. We saw exchange rate at parallel market at 490,
92.
490. Well, that is again not something to cheer about. But you did talk about the emphasis on fuel subsidy removal, which is, of course, has really caused a lot of uproar here in Nigeria between the government and Labour. We have seen that happen, and now these two bodies are still insisting that this is a reform that needs to be done. Right now, we're seeing oil price above $70, and it doesn't seem like Nigeria is still ready to actually provide those cushioning effect that we expect to see to help cushion those effects. Perhaps when they remove the subsidy, the effect it will probably have on these ordinary Nigerians that we are talking about. So what should the government be looking at?
Okay, so I'll look at 4 areas very quickly. Nigerian government has started to put rail track and rail station and railway system in few states. We have Lagos, Abeokuta, Ibadan for those that are doing interstate travel. We have Abuja to Kaduna, which passes through somewhere in Niger, but there is still no major stop along the line. We have Warri Itakpe rail station. We don't have sufficiently, but for those that are available, how do government encourage more people for movement of goods, even more than movement of people? I understand that after the launch of Lagos Ibadan, Mr. President, through the Minister of Transport, had said that they should now have more than just one morning and evening. They've been operation has increased to about 3. But that is just for rail. We need to work with NURTW or whatsoever group you call it. Either you are going to be giving them a mass transport system for people to benefit from. And we're also going to encourage farmers. Already, we have insecurity, which is one of the points that was raised, particularly by 86-page document released by World Bank. Insecurity took substantial part, and they are worried about the future of Nigeria because of food inflation that is driving it. Total inflation or core inflation. The headline inflation is being driven by food inflation because of high price of food in Nigeria, and they're even worried of what the future could be. But that said, how do we work with all stakeholders? That is why I say the president needs to set up a committee, not just for some federal selected people. I think the governors forum needs to be involved, maybe not as individuals, but to have representative 1 or 2. The presidency also needs to appoint some persons who understand the working of economics to recommend how government can go about this. And we are running out of time. Recorded NPC had said in secular
advisory committee.
Yes, that you have
council,
economic advisory committee is advisory. I don't know if they are being listened to. I also don't know what they discuss.
So how are we sure this new committee that will be, you are suggesting,
it may not totally be new. It could be economic advisory committee. I am saying that it should be some person's job to look at what we must do. Either it is new or existing committee. What is important is, I am afraid for the next 90 days, if we don't find solution to the lingering issues around return of subsidy, and what we can do with money we generate from oil. Because when you look at the numbers of what National Bureau of Statistics released at trade report, fourth quarter, this is already taking a lot of money from us, and when we spend most of the fund we have at our foreign reserve to import PMS, even though the same report showed our export is crude oil. So that is something to worry about, but not maybe not today. So, but you now get it with add-in currency, and you are still giving subsidy on it. But I will not say we should remove just yesterday and make a proclamation or make sign an executive order and say you've removed it without first preparing cushion effect. What will be the soft landing for Nigeria? Those things are possible, and I hope that the president and the team will do the right thing in no time.
So the bank also recommended that the government protect poor households from the impacts of inflation. What would you recommend in this regard?
Okay, so one of the things I've noticed government have started doing is to do CBN policy by giving 5,000 naira is what government have been doing.
That's the social investment
but beyond social investment, because social investment cannot protect
trader money,
cannot even protect anybody.
Exactly.
Because when you look at social investment of 5,000 naira, we are saying to live below poverty line using the rate that is more common, not the one central bank had put up on FX. You know, it's about 500. That's about 30,000. So what proportion of 30,000 are we doing? Definitely that cannot be hit. But if you can expand what we are doing through the microfinance, the National Microfinance Bank, expand it to encourage for more SMEs to come in. You know, whether government is going to say they will do rate discrimination for these as poor household so that they can go into maybe small scale or micro scale businesses and support them to survive. Or government wants to target some settlement where we have a lot of poor people and bring government presence there in form of infrastructure, because when you construct, they would work. And people have asked me, how do we mop up a lot of unemployment? You see, if we are serious about housing and we say we want to build low-cost housing, minimum of 500,000 a year, do you know that you will employ less professors, but you employ more poor people, and they will be busy? Look at it when Nigeria was developing in the 60s and in the 70s. People wonder why was unemployment figure reduced. The moment we discovered oil and we started doing oil business big, what happened? Most of the construction work that was going on reduced significantly. And as they reduced, the poverty level continued to increase. Then Nigeria had the first recession, I think in the early 80s, before mid-80s. Nigeria had so if you go back into construction, getting people to work, you know, bricklayers, someone getting water, you know, at the site, and so on and so forth. You need iron benders. Most of the people that we cut out of school, some of them have gone to learn work, some of them have not, some of them don't have required skills. They cannot be on television screen, you know, but they surely can work in construction site. And you want to know why China became intimidating for the rest of the world? Because between 2016 to 2018, China developed more in terms of construction, more than what America did in 10 years, within 2008 to 2018. China constructed more. And show me one country that you say is moving towards development, is moving towards first world nation, that does not construct. And when I say construction, not batter houses, I'm talking of mega structures. Nigeria has vast land, from Kano to Sokoto, from Lagos to Oyo, from Port Harcourt to Asaba to Delta, name it. But what are we constructing? It is pockets without structured, organized development. So if you want to mop people out of unemployment, we are talking of 33.3%, not of the entire population, only of labor force that is less than 90 million people. You are worried about 116 million people, because National Population Commission says we are about 206 million people, which is corroborated by National Bureau of Statistics, about 206 million people. Then you have less than 90 million people as your labor force. 33.3% of them are unemployed. 22.8% of them are underemployed. So you are worried about insecurity. I'm not surprised that we have insecurity. I'm not surprised that we have poverty. I'm not surprised because, and I can tell you, Nigeria can solve our own problems.
So why are we not solving it?
We are not solving our own problems because we have commercialized poverty. On election days, our people become so cheap with 1,000 naira, with 3,000 naira, with 4,000 naira. They go to ballot, they do not understand that the person you are electing is the chief economist of the country. So if that guy does not understand the working of economics, we are doomed for the next 4 years. So you like keep talking about religions, keep talking about tribe, keep talking of where the person comes from. it will affect the attraction of business because of weak and bad policies. World Bank and IMF is happy that the President Buhari's team have started to embrace and now warned that you have to dip this policy. You have to stay with this policy for your development potential to come up. And I tell you, President Buhari has a lot to worry about, and I don't envy him at all, because one of the things he needs to work about is a rate for electricity. And Nigeria will tell you they are paying for darkness. Meanwhile, for you to attract right investment, you need to deepen that and allow market forces. If market forces abdicate price for electricity, I'm telling you, it will be getting close to what we spend on generator. It will be very worrisome, to be very disturbing.
But I know that an average Nigerian would rather have electricity than keep burning fuel.
Yes, but at what rate? And when you say that, you look at labor. Labor will come back with argument. And I can tell you what the arguments are. Oh, so when you paid us 30,000 naira minimum wage, which some states are trying to reverse, which some states have not even accepted. So when you pay us 30,000 naira minimum wage, what we are paying for electricity has doubled. Now you want to triple it. Price for fuel has doubled. Now you want to further increase it. From which money the same 30,000 naira minimum wage. Price of rice before this was done was approximately 18,000. Now price of rice is about 24 to 35,000, depending on brand you want to buy. Accommodation is increasing, cost of transport is increasing, and name it. Inflation has even told us all of this would increase, because we have sustained inflation for some time now, and right now it's 17.9%, according to National Bureau of Statistics. So labor will be worried, and labor will protest, if you like. Even if they don't protest, they will go against government in making this policy. And I've asked, how do we solve labor problem? Don't solve labor problem with minimum wage. No, solve labor problem by ensuring what money you are paying to labor can buy remain consistent. What does that mean? Labor now can send their children to schools that they can receive quality education as though they're in private school, but it is government-owned, government facility, without paying money. That means you have saved labor the stress of sending the children to private school. So that's correct. Then you provided mass transit that is as affordable as you can imagine for labor. So labor will not think of carrying private taxi, maybe Uber or taxi, whatever you call it. They will not be bothered with that, because they know that the bus will come. Or labor says, I want to go via rail from island in Lagos to mainland. There's a rail system. I'm happy Lagos State government said they are putting something like that together.
All of this looks so expensive,
No, see, quality life is expensive. But you have to spend the money. If you say it's expensive, how do you account for 32.9 trillion naira debt?
Absolutely.
How do you account for that?
We're coming to that, because that is also part of what the IMF talked about, the fiscal deficit that we have when government is talking about revenue. Yes, we have seen the issue of insecurity, the issue of fuel subsidy that is also coming on board, and then, of course, acquiring vaccines, and also those are all the things that eat into government fund. Yeah. And IMF is also warning about this rising government deficit. Let's take a moment. We'll come back, and I would like to have your views on that. Welcome back. If you've just joined us, you're watching Business Morning on Channels Television, and we're looking at the state of Nigerian economy, taking it from what the IMF and the World Bank said concerning the recent developments in the economy. And we still have our guest here, Mr. Paul Alaji, who is the lead economist and partner at SPM Professionals. Thank you very much for sticking on, Mr. Alaji. Right, we're talking about the fiscal deficit. Of course, the IMF sees Nigeria's fiscal deficit remaining elevated. What, therefore, can be done to reduce Nigeria's fiscal deficit? Okay, so what can be done is to generate more revenue. And research from SPM shows that federal government can do up to 20 trillion naira in revenue. And I can tell you... taxing people? Not taxing people. Okay. Not taxing people. So how? So not taxing people. So I'm working with one of the agencies of government, and I realized that this agency of government could actually do more in revenue. And when you look at telecom, let's pick it sector by sector, but because of time, I stay with one sector, telecom sector. National Bureau of Statistics has showed us that this sector even grew during COVID by up to 14%, and even growing above 5% when the economy is struggling to do 0.1, now 0.51%. But revenue to government, either federal or state, did not increase from this sector. So the question is, where is our money? We know where the monies are, but the will to collect the money from those that are holding them
has to be stronger than the demonstration we are seeing from both federal and local government, federal and state government. Now, when we did research about what Nigerian government can generate, talking about federal government, approximately 20 to 22 trillion. And state government in IGR, and that will surprise anybody that gets this, can do up to 45 to 50 trillion naira in revenue,
big number.
Cumulatively. However, what we are doing now as federal government, even projected revenue is about 8 trillion. That is far less than half of the potential of the country. So when you look at production possibility curve, superimposing revenue on it, I can tell you we are operating less than 40% of our revenue capacity. We have no business borrowing. That's the truth. We have no business borrowing. Now, in collecting revenue is not an easy task. A lot of bottlenecks, but when the chief executive, either of states, of local government, or federal government, want it done, they will surely get it done. And we're getting to that point where questions will be asked. How would you finance your big campaign expectation if you want to lead, either as governors or as president or as local government chairman, whatever you want to run for? But I can tell you, Nigeria has a lot of revenue possibilities that are not yet tapped, or in which people here and there are compromised, and not doing the right job, or which may require some level of private sector intervention for support so that we can. So that is one thing. Another one is public-private partnership. So for some of the project government would have spent money on. This is Lagos. We've seen what happened in Apapa-Oshodi Expressway. And the partnership, now the contractor will get tax credit or might have gotten tax credit. I see that FCT administration is trying to replicate the same thing. Particularly, recently you hear government has approved, what do we call it now? Land swap program, so that developers can also have land swap program similar but not exactly to what is going on here in Lagos with federal government. This is not Lagos State, but you have seen Lekki Expressway, which Lagos State has first demonstrated that. So we will need to do more public-private partnership, but more importantly, liquidity in the system. The monies are here. Most of the organizations that have done business, from information that are available, that have come to do business in Nigeria, continue to repatriate funds without having tremendous impact on the economy. And I think government, we need to do an holistic review of this economy for us to come out of the shackles and chains of low tax income. Because when you look at World Bank's report, it was concerned because of insufficient tax revenue to GDP for the country. But it doesn't mean we should not tax Okada rider, official tax. That will not make sense. I've met some state executives. I'm talking about governors that were considering, and I said, this is not the way to go. They will stone you on the road. Your monies are with people. Some organizations don't even know from investigation, don't even know, and I'm talking of states now, particularly at Staffex IGR, revenue that belongs to them. So somebody has done withholding tax, or have done fixed deposits within a state. What proportion of that money is supposed to go to states? State government are wondering how much you go to them. And I think there are states that are doing this correctly already, like Lagos State. There needs to be that synergy from one state to another. Maybe training for our governors, so that they can understand the workings of economics, and the rate at which we borrow money will significantly reduce. You know why? Why it should reduce is this. The impact of debt. 3 reasons when you want to borrow. Number 1, debt to GDP. Number 2, revenue to debt. Debt to GDP is okay. Revenue to debt is very poor. But the last one is impact of debt on GDP. Average GDP has grown by less than 2%. But debt has grown by 15%. So that will worry anybody that understands how that's
All right, thank you very much, Mr. Paul Alajo. We do appreciate your time.
Thank you so much.
Thank you.
Thank you so much.
Okay, and how are the market players reading the IMF end of mission statement? Of course, we'll have to hear from Omotola Abimbola, investment analyst at Chapel Hill Durham. Now, good morning, Omotola. Thank you very much for joining us.
Thank you very much, Emilio.
So the IMF's end of mission statement is certainly an interesting one. It discussed everything from economic growth to inflation to exchange rate structure to financial system stability. Out of all of these, which do you think has the most important implications for markets, both equity and debt?
Thanks for the interesting question, Chimese, and thank you once again for having me. So I think for markets, markets will definitely be very encouraged by the positive comments that the IMF had on the economic activities and the outlook of the economy. So as we all know, the COVID-19 induced recession that we had last year was very short-lived, and we had a very mild rebound in Q4 2020, which was further consolidated, on in Q1 2021. And I think based on the outlook of the IMF, they do expect that the recovery will gain even further momentum going forward, with the very high GDP growth target for 2021 of 2.5%. This is perhaps the highest in the market. On the optimistic side, it does appear as if they have been very optimistic that Nigeria's very short-term economic outlook, at least better than what the entire market is expecting. And I think that is very positive for the equity market in this regard, because at the moment, Nigerian equity market has an extremely cheap valuation. On the price to earnings basis, the all-share index is trading at 8.2 times, which is very cheap compared to what you have in emerging markets and frontier markets. Also, the dividend yield of the market, which is now above 5%, is nearly 2 times what you have, across peer countries in emerging markets and frontier countries. So, in this regard, that's very positive. And now, as we move on in the economic cycle, the expectation is that corporate spending will even further rebound, as we are seeing an improvement in the economy. Beyond the economic activities, there have also made some remarks regarding domestic prices. As we know, over the past months, we have seen the headline inflation from near record level that is towards in March, and the IMF view is that we're going to be consistent disinflationary pattern over the near term, and they are expecting that headline inflation will touch 15.5% by year end, which is a very significant moderation compared to the 15% level that we have at the moment. So that's a positive thing, particularly for the debt markets, where we have seen interest rate level jump aggressively at the beginning of this year. But our view is that it's going to get worse before it gets better, because when you look at the current level of fixed income yields across the bond yield curve, for instance, we are seeing yields at an average of close to 13%. So that's still very much more lower compared to the current level of inflation rate, and even the expected level of inflation rate over the near term. Our view, interest rate environment move up slightly higher at cost before we start seeing a much more significant and sustainable decline in the interest rate environment. But perhaps lastly, one other key outcome for the market is the exchange rate development, because as we all know, one of the key reasons why we are seeing equity valuations this very cheap in Nigeria at the moment, that foreign portfolio investors, they are unable to access the domestic market, largely because of the lack of liquidity in the foreign exchange market and also the very quiet current market. So, markets will definitely be looking forward to having a much more liquid and much more flexible foreign exchange market before we start seeing a strong pickup in investor sentiment.
All right, so still looking at this exchange rate market, the IMF once again had some important comments to make, particularly on a convergence of the multiple exchange rate structure. Does this align with your view?
It does align with our view, and in fact, the view of the market, because at the moment, what we have is the fragmented foreign exchange market. The CBN has acted in good faith, actually trying to convert some of the multiple, exchange rates that we have. And very recently, the CBN actually discarded its previous official rates and then adopting the investors and exporters FX be the de facto, official exchange rates in the country. That's a very good step and very important for investor sentiment. But that's only the beginning of the reforms, but we still need to see a lot more before we can have much more certainty in the foreign exchange market. And chief among the things that the market is looking forward to is an improvement in liquidity in the foreign exchange market and the clearing of the massive FX backlog that have piled up over the past 1 year. So at the moment, if you look at the high yield window, it's now trading, less than $100 million per day on the average, compared to over $200 million per day that is trading before we had the COVID-19 crisis. So definitely we need, more liquidity in the high yield window, and that can only happen when we have more flexibility in the pricing of the currency by the central bank. Another thing that we need to see is the clearing of the FX backlog. Current estimate of the backlog is between $7 to $10 billion, and that includes, demand for FX by manufacturers, as well as demand for FX, by foreign portfolio investors who want to repatriate their capital, and even demand for FX by domestic corporates who want to make, capital repatriation to their parents' companies. This massive FX backlog, is like a cloud hanging over, the FX market, and that has to be supported by the central bank before we have, much more liquidity, in the foreign exchange market. And also, we need to see more flexibility, and that's very, very, very key to the market in the pricing of the currency. So right now, if you look at the parallel market, for instance, we're seeing the FX rate being very close to $500 to the dollar. Now, the parallel market is not a very large extent. It's not the appropriate barometer for any economy because it's very subject to speculative activities, and it's not as. But the situation where you have a lot of restrictions in your official FX market and you don't have enough input to satisfy demand, they're going to chase lots of legitimate demand for FX to the parallel market. So we need to see the central bank actually align the FX rate in the official windows, actually, move towards a much more realistic figure that we can have, much more autonomous inflow of FX into the market that will assist clearing the backlog of demand and also in a way, help to ease FX implicit crunch that is facing manufacturers and businesses in the country. That is very, very important and very central. What happens, in the economy over the very short, medium term. And I think beyond all of these things that we're even talking about, one other key thing that, foreign investors will be looking forward is for us to have a very, very transparent, and rule-based FX market, which is not susceptible to frequent liquidity challenges. So over the past 6 years now, we have had 2 episodes of acute FX liquidity crunches in the economy, and that has happened, way too many times. Beyond all the net-term fixes that we need to do in the FX market, we also need to develop a much more transparent and rule-based FX management framework that will be respected by everybody and that will serve, as a barometer, for what investors will expect, in the foreign exchange market, regarding the economic cycle that we are in.
Well, in your words, Abimbola, it's going to get worse before it gets better. Thank you very much for your time this morning. We do appreciate it.
Indeed. My pleasure.
And for opening call to the market, we have Will Ibon here. Well, Will, although the equities market closed positive on 3 of the week's 4 trading sessions, the gains proved insufficient in pushing the market to a green close for the week. We would like to know what happened there. But first, tell us about the transactions at the foreign exchange market last week.
Good morning, Chimi. A lot happened in the capital market. We're going to look at them in bite sizes. But like you said, let's head first to the Forex market, where sports, forwards and futures in the week ended June 18 had a total turnover of $583.88 million. The figure represents a 15.22% decrease from the total reported in the previous weeks. This week-on-week decline was due mainly to the 9.03% decrease in the spot volume as indicated in the table. In particular, The investors and the exporters window, the total value of transactions carried out last week dropped by about 9% to $489.19 million from $537 million traded in the previous week. Meanwhile, in the NAFEX window, the Naira fell against the dollar by 8 kobo to 410 Naira, 33 kobo to a dollar, as against the previous week, where the Naira traded at 410 Naira, 25 kobo to a dollar. This represents a 0.02% drop. However, in the parallel markets, the Naira gained against the dollar by 0.51%. And that's a good one, at 496 Naira, 25 kobo to a dollar, compared to 498 Naira, 80 kobo recorded in the previous week. To talk about the Forex market and the fixed income market, we have Constance on here, a fixed income dealer at Access Bank. Good morning, Constance.
Good morning, and thank you for having me.
Well, Constance, the Naira has seen a couple of swings, and will this trend continue? And what actions are needed to stabilize the foreign exchange markets?
Okay, so we just need more intervention from the CBN in the INE window. This will help firm up the market a bit, seeing that the dollar liquidity is a little bit low. Excuse me.
What is the outlook, Constance? What do you think the outlook is for the fixed income market this week? What do you think we're going to expect?
Okay, so we have a maturity of about 15 billion on OMO this tomorrow, Tuesday. We expect bond auction this week. We have a total of 150 billion on offer across the 2027, 2035, and 2050 bond. Our previous stop rates was about 13.1, 14, and 14.2 respectively. Right now, we see that there's a bit of a bullish sentiment in the secondary market. We don't expect much to happen. We expect that the rates will come down because the market will obviously reflect what the secondary market is doing. Currently, we have the 27 trading at 12.5. We have the 35 trading at 13.2, and we have 50 trading at 13.5 levels. And this might just reflect where the stop rates will be. So by the end of the week, we expect this bullish trend to last all through, and then we expect that the CBN will then mop up the excess liquidity with OMO on Thursday.
Okay, Constance, thank you very much for your insights on the program. Quickly before we go, we see that let's check out the equities market, where the all-share index and the market cap depreciated by 1.30% to close the week. The all-share index was at 38,648.91 points, while the equity cap was at 20.14 trillion naira. When compared to the previous week, we see the market cap of listed equities lose about 266 billion naira. We're hoping for better things this week, and we hope that this week, Chimi, we're hoping this week will be a great one. But that's all I have. There's not enough time to give you so much details.
Optimistic there. Thank you very much, Will.
Thank you.
All right, we'll take a break, and when we come back, we cross over to London. All right, it's Monday morning. Let's see what's happening in London with Juliana. Good morning, Juliana. Well, a shock takeover approach for UK supermarket Morrisons from private equity firm Clayton, Dobler and Rice has raised fears over possible job losses and could prompt a bidding war for the UK's fourth largest grocer. Morrison's shares surged 30% this morning after the takeover approach. What more can you tell us about this developing story?
Good morning, Chimisi. Yeah, well, we started the week in the Square Mile with a big story. It's been described as the most audacious, unsolicited takeover bid during the pandemic. CB&R, the US private equity firm, actually has a pretty significant man sitting on their board, the former Tesco boss. They have put in an offer for Morrisons, as you said, the fourth largest supermarket here in the UK, the second biggest producer of fresh food, of £5.52 billion. Morrisons have rejected that bid, saying that it was grossly undervalued. But it has set off some panic alarms here in the UK, not only because we saw this before. It was only a couple of months ago that the Issa brothers and TDR Capital put in a bid, a successful bid for Asda for about £6.2 billion. And now there are many wondering, is this what is going to happen? Are big supermarket stores in the UK going to have these aggressive takeovers from private equity firms? One of the concerns is, if it's a private equity firm, do they really care about the individuals? Asda have over 100, Morrison's have over 118,000 staff, about 500 stores, and a lot of commentary this morning has been focused on those stores and the property that they own, which could be very lucrative. The offer has been rejected, although shareholders were pretty happy. 30% surge in its share price this morning just shows how much interest there is of this bid. CB&R expected to offer more money, but there's also been some speculation that Amazon may actually put in a bid. They already have a long-standing relationship when it comes to Morrison's deliveries, but who knows? But there are fears and concerns that perhaps this is what we are going to start seeing now, more US influence over British stores.
In the meantime, global financial markets feel edgy after tumbling on Friday amid fears that rising inflation could force central banks to slow their unprecedented stimulus measures. Give us a sense of how the London markets are waking up this Monday morning.
Yeah, pretty gloomy. It's gloomy in London. It's raining, it's pouring, and we've seen the same sentiment on the markets, as you said, triple-digit losses on Friday. This morning it opened just below that pretty optimal 7,000 point mark. I believe it's just above that at the moment, as you said, pretty much following what we saw in Asia. The Japan Nikkei 225 was down by about 4%, and it is about this inflation worries and the fact that the US Federal Reserve have now started mulling over chopping or pulling up those pretty low interest rates. So not great. We've got our own scare coming on Thursday. Bank of England Governor Andrew Bailey and the Monetary Policy Committee meeting takes place. They're not expecting to raise interest rates, but as we were looking with Jerome Powell, we'll certainly be looking to see what Andrew Bailey has to say in those minutes on Thursday afternoon, Chimmy.
All right, Judena, we'll continue to keep a tab on the market, and we'll get more update from you later in the day on Business Incorporated. Okay, let's talk crypto market now with Ladi. Well, Bitcoin dropped over the weekend amid a focus on Chinese mine closures and potential regulatory scrutiny. Any rebound this morning?
Well, just a slight rebound because Bitcoin broke the 34,000 support. So more negative news keeps piling on, beating that price down. And the top 100 coins took a massive beating this morning, with Bitcoin at 32,900 earlier in the morning, down about 7%. It's all red. It's a red Monday. It's been a red weekend, and now we're having the redness extend into Monday. Market cap, $1.39 trillion, traded down about 6.69%. 24-hour volume, 88.17, up about 33%. And Bitcoin dominance is also at 44, above that 40 range. Price of Bitcoin this morning, 32,808. 24-hour volume traded in Bitcoin this morning, $39.41 billion traded. And now we see Bitcoin breaking that 34K support. We might hit that 31,500 area, with the MACD on the one-day chart actually about to cross in a bearish manner. Let's talk to Olumide Additional now. Hello, Olumide.
Hello, Ladi. Good morning. Yeah.
Good morning, Olumide. Well, Bitcoin is looking really very, very weak this morning. It's a red Monday. What's happening in the market?
Yeah, there's so many bearish sentiments, just like you earlier treated. First of all, an hedge fund is about to unlock 60,000 Bitcoin in the coming weeks, and that will definitely weaken price across market spectrum. Don't forget that the market, the bullish momentum is stalling on China's crackdown on miners, and that's really affected the hash rate of that's the computing horsepower of Bitcoin. And it's so bad that the present hash rate of Bitcoin is about 91.2 trillion hashes per second, and that's about half of it when it was in May, when it was about 171.4 quadrillion. So what is really telling you is that the miners' crackdown has really weighed on the market. Then also we are seeing that investors, institutional and retail investors, also have a weakened buying pressure. So at the point we saw that Bitcoin broke the $35 support level and went down as well as 32. So what we are going to the coming days means that the bearish pattern might be strengthening. And I forgot to say the dead cross occurred about 2 days ago on the hour chart, giving a strong bearish signal. Though some market watchers say that anytime that signal happen, a reversal usually take place, because you remember the last time it happened, that was March 2020. But this is not the case right now. It's looking down for Bitcoin, and when Bitcoin falls, all other altcoins to drop radically. So that's really what's happening right now, Nadi.
So with this death cross, we could expect at least a 50% drop.
The percentage, I'm not really sure how low to drop, but there's one thing that is certain. Bitcoin might test below 30. It's likely that Bitcoin tests below 30,000 price level, because the number of coins coming going to be unlocked by that hedge fund, and the fact that institutional buying pressure has reduced drastically, though they are not selling, according to data, shows that they are still not selling their coins. But the problem is that we are not seeing such inflows, and the macros in the market is not really supporting. Then also another thing that is really weighing on Bitcoin right now is the dollar. The dollar is gaining momentum at record level. You don't forget that the US Fed has said that they're going to move forward interest rates. So at one point we're going to see market liquidity tightening, and that will really mean that as inflows from risky assets will definitely trickle down. So it's not looking good at all. So the price level below 25 very likely, but I don't know how low it can be.
Okay, how low can it go? That's the question. All right, Lumide, thank you so much.
Yeah, thank you, Adi.
So, Chimi, there you have it. Top 100 coins are beaten down.
Whichever low Bitcoin goes, well, I'm sure there are still some people waiting to latch onto it.
To buy low.
Absolutely. And one would wonder, well, if Bitcoin is going, what other coins should, I mean, this is a new week. I'm sure there are other altcoins.
Well, right now, with the altcoins taking a bit, when Bitcoin is volatile, you see altcoins dropping double digits, like 20, 30%. So it might be safer to just be in USDT, stable coins for now.
Absolutely. Yeah. Well, we'll continue to watch that market. Anyway, that's a wrap on the program. And don't forget to join us later in the day on Business Incorporated at 1:30 p.m. for more update on our business stories. For now, I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.